Look, the combination of lower growth and high inflation, I think, is not likely to persist. What we're seeing right now is a reacceleration in both growth and inflation overall, and that's a result of what I think is a policy error that the Fed committed in Q4 when they pivoted too early on the back of just a few months of good inflation prints, and that unleashed all of this animal spirits that led both growth and inflation to be higher. That impulse is working its way through now, but we think from second half onwards, we'll see both growth and inflation moderating.
Let's talk about what you need to sell then. I don't think there's any point about talking about what you need to buy, because if you've not been in this market, then you've clearly missed a trick. But if you're on the what do you sell page, if you think that this is not sustainable, what exactly do you lighten up on?
Well, I'm not sure you should be lightening up, to be honest. We've seen a bit of a pullback, the keys to the market right now are in the hands of bond yields. So that's what I would be watching to see where things go. And this week, with the quarterly refunding announcement on Wednesday, we'll get some details today, the rest on Wednesday. That's going to really be pivotal in setting the direction for bond yields. If we do see further weakening of markets as they cool off from this crazy run we've had since October, we actually think you should be leaning into risk assets at that point.
I want to. You've said some. I think this was the part that because you say even in your notes, and you've just said it now, that the Fed pivot in Q4 was a mistake, and I want to just unpack why you think that was a mistake. Inflation was going down at the time. You had already raised rates to the highest you had pretty much seen in more than 2 decades, and you needed to have obviously reached equilibrium because you were worried as well about growth, about spending as well, and trying to maintain still a buoyant economy despite the situation. Why was that a mistake?
So I'd answer it with 3 words. Keep at it. Those were the words that Volcker used in describing how you're supposed to kill inflation. It's the name of his book.
So more rate cuts in terms of keep at it?
No, keep at it in terms of keep fighting inflation. Don't let up too early.
Yeah.
The mistakes that were made by previous Fed committees was that they let up on inflation too early. You have to keep at it in terms of remaining restrictive until inflation really has been squeezed out of the system.
Isn't that what they've said, though, Hani? I mean, they've said that, look, one, we're going to look at the data. We do expect to cut interest rates, but that's if inflation continues to go down. Ultimately, we would like to think that we're at restrictive territory where we're able to bring inflation down, and so the fight will continue. They haven't brought down inflation interest rates yet. They've just maintained a stance of where interest rates are, and they said in future we're looking to do this.
Yes, but the words are perhaps even more important than deeds when it comes to monetary policy setting. And the forward guidance that they gave in November really set the tone that we're now shifting towards a stance where we're looking to cut rates. It was unnecessary. It wasn't. You don't need to encourage the market to go out and take risk and to borrow at a time when inflation, yes, has been coming down. But we've seen this mistake before. We've seen where inflation can come back with another wave. This was also happening at a time when the US government is on a spending spree. We've seen the largest deficits outside of recessions in history. That has kept growth and inflation pumping along, and the Fed's mistake was not recognizing that sufficiently, in that it could actually keep the economy growing much faster for longer than they expected.
So when it comes